Okay, so let's begin our next round of the COVID-19 viewpoint series. Good evening to everyone who have joined us, and I'm sure there are many more who are going to join us today. So welcome again to the COVID-19 viewpoint series. Today, we have in our midst Mr. Gandhi, the eminent central banker and ex-deputy governor of RBI. Uh, are we not really lucky to have him, especially in these uncertain times when RBI is playing a stellar role in reviving the economy? All our eyes are focused on the government of India, the state government, and the RBI as to what, how, and when will they bring up the economy and bring back the old days. Will the old days really happen is something that we will talk about. Mr. Gandhi is a postgraduate from Annamalai University. Okay, he has risen through the ranks. He rose through the ranks in RBI to hold the coveted position of deputy governor. I think everybody we have shared his credentials already, and some of them are there for you to see right now. But what most of you may not know is that he is a chef at home. He loves cooking. Sir, have you learned anything new these days, new recipes these days?
Certainly.
Yes. Okay.
A lot of time for reflection and trying out. Yes.
Excellent. Excellent, sir. So that's good, sir. I think, most people are trying out everything new with what's happening. You're going to hear Mr. Gandhi now. If you have any questions, do send in the chat box. We will try and get across to Mr. Gandhi as many questions as possible to a guest. I'm sure today we're going to have a lot of questions to him, but we have a time factor. So try to limit your questions to one per participant if possible. Okay, unless you really you're dying to ask a question. So we all know that the economic fallout of COVID will impact credit, loan, deposits, income, and much more. Many more things. My question to you, sir, is twofold. What will be the new normal look like in the future? Will we see accelerated migration to digital channels? May I have your thoughts on these, sir?
Okay, thanks for the opportunity to EPS and all others who are listening to this video conference. And thanks once again. Yes, we are all in the midst of a very trying time. This is the first time worldwide enormous impact on economic, social, political, and scientific spheres have happened. And on the economic front, naturally, the disturbances have been from the supply side, demand side, market side, and even socio-political economy side as well. So if we have to, before answering your question, coming to your question, I just want to give a little overview of where we are and how to look forward. So around the time COVID started striking the economies around the world was already decelerating. In the Western economies, that is advanced economies, the growth was the forecasts were brought downwards, and major economies were expected to grow sub-zero one level only. China was also decelerating, and India had already been decelerating for almost 8 quarters. Continuously it had been decelerating. So that was the setting when the COVID started striking us. And as far as India is concerned, the impact had been on 2 fiscals, last fiscal also, and this fiscal. Last fiscal, of course, the COVID impact has been minimal in the sense that there was 1 fortnight of slowing down and another 2 weeks of full shutdown. Whereas in this fiscal, the shutdown had been already 4 full weeks, and they expected to have a slow up on the next 4 weeks to 6 weeks, kind of. So that is a setting we have to keep in mind. And to assess the impact on the economy as a whole, first thing which we have to, I would take gross value added as a good metric rather than GDP. So the economy was expected to grow in the last fiscal at nominal terms to 182 or 185 trillion of rupees, of which if we shave off the impact of COVID, that is, as I said, that 2 weeks of full shutdown and 2 weeks of partial shutdown type. So it would have kind of resulted in a loss of value added of about, in my reckoning, it is about 2.5 lakh of crores of rupees. So that is based on the assumption that agriculture was not affected, not much during that period, and the mining and the manufacturing were fully affected. Services sector was fully affected, but the financial sector and the government sector were not, were only partially affected. On that assumption, if we make it, it was like something like 2 lakh crores. And that's why we saw in the first round of package which the government announced, it was something similar to 2 lakh crores of rupees, 1.75 specific package, and another 25,000 crores relating to the Garib Kalyan Yojana. So together, that was assessment at that time had been made. Now, during this fiscal, that is the current fiscal, already the entire April we have lost, and during May also we are likely to be having partial startup and partial shutdown. Especially the green and the orange zones will start working towards normalcy during the period, and the red zones, of course, will be faltering a little more. So if we keep that as about roughly about 7 weeks of value added we have lost, if that is assumption, if we made, then the total loss of income for all together, it should be something around 6 lakh crores of 6 lakh crores of income. That's a rough thumb rule kind of estimate. We have to this is the as I said, it is a worst case scenario. We might have lost this high amount. So going forward, when we want to understand how it is affecting different segments of the economy, certain assumptions again we have to make. The reasonable assumptions, as I said, one is about when we are going to be lifting completely all the restrictions that obviously for red zones we have to think about getting back to full normalcy only in June, whereas other zones during May itself, they will at least officially the restrictions will be lifted. When exactly they will be certain critical factors and decisions which we have to look forward will be one, when is the, in my opinion, the very first indicator will have to be relating to movement of people and goods, that's a transport. The public transport, road, rail, and air, when it is started functioning, that will give the clear signal that we are back to normal. It will create the right sentiments among all the people that things are back to normal. So that will be a very important announcement which we have to look forward. The second will be, of course, the monsoon. As of now, the expected forecast has been very normal. It is a long-term normal, long period normal we are going to have. That would mean that rural income, rural economy is going to be normal. That will give the almost like a pump priming. That will give be the engine for the economic growth during this period. So that is another factor we'll be watching. Third, of course, the government package of reliefs. First installment has already been done. So we are now hopeful that what further the government will be about that little bit later I will mention, because that will be another point to be noted to be looking forward. Now, segments of the economy, whether it is business, trade, or industry, whether it is irrespective of the size, whether it is big, small, medium, or micro, because the problem for them is not about the loss of profits or loss of returns during this total 8 weeks period. So that businesses have always found method of dealing with loss of income. That is not the real challenge. The real challenge for them will be towards the loss of liquidity, cash flows. Because everyone is going to experience delay in collections. There will be a long problem, irrespective of the size, including the bigger ones, including the government. Everybody is going to be delaying payments for somebody else. So that is going to be locking the funds of the people. That is the first major problem the businesses are going to experience. The second experience, they will all be actually be worried will be loss of demand. That is where the real problem, the exact problem is going to be how soon the demand is likely to be back to normal. That if you look at the different segment wise, there are going to certain segments, the demand is going to be delayed. Picking up of demand is going to be delayed very, very heavily, especially the services sector, the tourism, transport, and communication. So they are likely, and all those goods and services which depend upon the discretionary spending of the people, they are likely to be facing very low demand growth in the next fiscal. Whereas the others, they are likely to be back to normal very soon, whether it's agriculture, agricultural-based, rural-based, or the mainstream manufacturing, mining, all those things will start coming up quickly. Construction, again, there is going to be a partial recovery, but commercial constructions are going to be affected a lot. The private construction relating to housing, that may continue to be, it will be possible to start little early. Finance, yes, that is going to be, in my reckoning, there is going to be a very big demand for finance. Everybody is going to looking for support of additional finance, whether it is business or individuals. Business, as I told, that because all of them are going to experience the cash flow problem, collection problem, receivables problem, everybody will be asking for, expecting for additional working capital limits. So there is going to be a big demand for bank funding or NBFC funding or even fintech funding. So that's a way there is going to be high demand for finance. That is one aspect. The second aspect relates to individuals. Individuals, there is a segment which is personal service, whether it is professionals like doctors, lawyers, or other type of professional people, or even the blue-collared professionals like electricians, plumbers, taxi drivers, auto drivers, etc. All of them have lost income a full 8 weeks. So that income, it is a full, it is not just loss of revenue. It is actually their own full returns, they have lost it. So it is this group which is going to be experiencing real problem, in the sense that they are not like the migrant laborers, they are not like the destitutes, they are not like the bottom of the pyramid people who can depend upon government largesse, whether it is ration, availing ration items from the PDS, or availing Manrega and other kind of subsidies from the government. These are the people who had kind of self-employed. They had that satisfaction of being standing on their own legs, and they are the people who have been affected a lot, and their confidence is very shaken. They are all too proud to go back to government and ask for alms from the government. So these are the people who these people's demand is going to be like this, and because they have to maintain their standards of living, whether it is for food or expenses, household expenses, supporting their own children's education, whatever it is, they will be looking around for loans and credit. And that is where the big demand for individual personal loans are going to be on the upside. There, one big immediate ready availability for them will be the credit card. Credit card outstandings in any case had been increasing for the past 3-4 years. It had been growing at 25% to 30% or even more. And in this fiscal, I would expect the credit card growth to be very, very robust and strong. Number one. Number two, all the fintech groups who were in the who are already had experience and already had established their credentials in terms of assessing the people's credit through alternate models. There will be again be demand, because for consumption expenses, these people will not be able to get any support from the mainstream financial sector, whether it is banks or even NBFCs. And that is where these fintech groups who are itching to, who have built up their capability to assess their creditability, and on that basis, the demand will be certainly increasing. So going forward in the financial sector, I do expect a very high demand for credit. That is the demand side. But about the supply side, within the financial sector, the financial sector mainstream, of course, is the banks, and the banks are not going to be very quickly gearing up to meet this kind of demand. They already had last several years, there had been problems in terms of credit decision making. There is quite a bit of hesitancy on the part of the decision makers within various type of banks. And in the recent times also, despite RBI giving so much of additional liquidity, even 7 lakh crores of liquidity is coming back to Reserve Bank through reverse repo. That would mean that mainstream bankers will be very reluctant to be easily extending credit to the needy people. So it is going to be the shadow banking and the new entrants and the microfinance, because the microfinance, again, because they work at the bottom end of the pyramid, and all these people will definitely be, as I said, will be looking for additional credit lines to support their livelihood. And that is why this set of group of people are going to be the real demand-seeking, credit demand-seeking people, and they are likely to be growing. That's my initial response to your query.
Thank you, sir. Thank you. That was really elaborate and really insight into the various aspects of the Indian economy. I had a question to that. Was do you see any acceleration in the way, or do you see a acceleration, the migration to digital channels, that we get more and more into digitized channels?
Okay. Digital channel expansion has been happening in our country for several years, so that momentum will continue to be logging on. And if your question is that, are we going to have sudden spurt in digital way of functioning across the entire spectrum of financial activity? Yes, because as I said, that the fintech and microfinance institutions, they heavily depend upon technology for rendering their offerings. So that part will certainly be increasing. But that does not automatically mean that's there is going to be a wholesome shift towards a digital banking or digital finance. Because the high end, even today, going forward also, for several period, I won't expect in the short term at all that the digital finance is good enough for very large scale, absolute amount of transaction. There, people will always, both on the demand side and the supply side, people would like to have personal interaction before the final call is taken. So that is why the lower the amount, lower the ticket size, whether it is credit or it is investment or it is disinvestment, payments, remittances, so long as the amount is going to be reasonably small, that set of transactions will certainly be moving towards a digital modes. But the higher the value, the confidence will still be beyond back to the traditional modes of transaction.
So thank you, sir. Thank you. That was again very elaborate and good. So I had a query which was a little bit more on the youth of the country. I think this virus, all generations have had a kind of a rude awakening to the fragility of human life, conditions, and the wallets. But for the next gen, or Gen Z as some people call it, the impact seems to be profound in terms of their education, their employment, savings, investment avenues, etc. What's your advice to the next gen? Because they are going to be the kind of people who are going to be most affected now, looks like, in the post-COVID era. What would be your advice to them?
Okay, the Gen X who are going to be out of their academic stream and coming to job or business market. So what are the prospects for them?
Yeah.
Yes, in the current fiscal, their finding employment is going to be tough, because one big issue with most of the individual businesses or companies is that it is natural for them to be extra cautious in terms of expanding their whether it is employment or their infrastructure. Because having experienced the problem in the last 2 months, unless they see a very clear, committed demand increase, they are unlikely to be very quickly adding up to their roles, whether it is by employment or infrastructure or spending on capital expenses and other things. Whenever there is a cash flow problem, first casualty will always be capital expansion or capital expenditure. So that they will all be waiting for a good time to, or good signals to come to be seen. So that means that finding employment opportunities in the coming, in the current fiscal, it is going to be tough for that new group. Okay. That is one side of the story. The other side is that increasingly, we have seen in the last 5 to 7 years, more and more youngsters have started relying on startups.
Yes.
So that's a trend which is picking up, that they are able, they have the capacity to face the risk or take the risk, and accordingly, so they should be looking around for opportunities for standing on their own. It is going to be tough because support in terms of financial and capital support for them is not going to be easy, but they will certainly be trying to venture into startup scenario as well. And the digital, because by the demands which are going to come, it will be possible if you have to keep your costs low in this scenario, and if you have to keep your number of heads low, then technology is the right offering. So tech-based offerings, that is what they will be in demand, and that's the way the new entrants will be looking at whoever is technically qualified with the appetite to take business risk. They will be venturing into starting their own, and in that process supporting some other people as well. Yes. So the generation next, they'll have to look around for those kind of opportunities to support themselves.
Yes, thank you, sir. I think that's well said, sir. I think, and that's the power of India, the next gen, and there's so much of startups happening, all powered by the next gen people. So I think there is a lot of opportunity coming your way. I think everybody is asking, is wanting to ask this question. So let me ask, because the question is, our India is taking a lot of steps, but reviving the economy will be a gigantic task. We all know that. What, in your opinion, should RBI and Government of India do? I think you already have explained in your first opening itself a bit. If you could just summarize it for the participants, that will be nicer.
Okay. Yeah, the packages that are expected both from the government and the Reserve Bank will be like this. So first is that, as I said, the businesses, irrespective of the size and irrespective of the segments, all of them will be looking around for, because they will all be experiencing cash flow problem and a longer collection cycle. That would mean that there has to be facilitation for larger working capital finance to them. Number one, and added to that, because in this 2-3 months period, there has been problem about no cash flow at all. RBI has already given exemption from the perspective of giving a moratorium on payment, but the condition is that after the moratorium period is over, that amounts are due, and unless like in the fixed loan, you have already elongated the period, then yes, that takes care of, but it doesn't take care of the accumulated interest which becomes due once the moratorium period is over. And in the working capital also, once the period is over, the amounts dues are to payable immediately, and that is where the businesses will have problem. They are all looking around for, I would expect some kind of the one-time restructuring. That is like Dr. Jalan's time in 1998, it was announced that there will be one-time non-discretionary and non-discriminatory settlement, and which will not amount to NPA. Something like that program may have to be required. That is, the bank should look at it carefully. And the second expectation will be from the government, especially for the MSME lending, that for fresh lending and even for the outstanding, kind of credit guarantee to be coming up from the government. There already work is going on. That's what we understand. So hopefully something should materialize out of that to support the MSME sector. And one radical suggestion which people will have to reflect more will be about it is not just credit support which the MSMEs will need. Actually, they require capital. They require equity support. So government will have to think about a kind of direct equity support to these entities, or even a quasi type of support will have to be there. So that will go towards reducing their cost of operations, and sufficiently longer period perhaps, because it is capital, it can be structured in such a way that it is repayable. If it is a kind of preference capital, it can be structured to pay when the good times come back permanently. Sure. So that is another thought which government and especially basically it will have to be by the government, and it could be through Mudra institution or through SIDBI. It will have to be worked out. Something will have to be worked out to support the equity side of the financing.
Sure, sir. Thank you. So a businessman asked the question that, there's been mandated that we pay salary. Mr. Bhargava is a businessman, and he said if it is get mandated and the businesses are unable to function, we won't want the business to shut down because as it is, they don't have the money.
That's true. That is something very strange. I think that what the government intends is that original intention was that it is kind of suggestion to the businesses that you support your own employees and laborers during this period of time, and which you can kind of recover over the period. But by making it as mandatory, that looks little, definitely it is anti-business, because when the business have lost not just their profit, they have lost even the cash flow during this period. The turnover itself has been lost. So it will be very, very hard on their part to be giving money for the laborers. So the way the government had been expecting. There has to be some adjustment with regard to that, unless they themselves get a kind of long-term credit, a medium-term credit to meet these kind of outflows, then yes, it will be possible for them to meet such demands.
Thank you, sir. Another question I have is from Mayur Shetty, and his question is that how should lenders deal with borrowers whose income has fallen short of levels required to cover payment of installments? So how do they go about it?
Yeah, that's a real challenge that we have, because it's a loss of income of 2 full months during this period. How to recover? So that means that the demand will have to increase much more than the normal times. So the recovery, that would mean that recovery is going to be stretched for longer period. So because of that, everybody will be looking around for reduction in cost. The reduction in cost includes the capital cost. That is where the lending, the cost of lending, the cost of servicing their waiver loans, all those things come, and that's where the expectation on the government and the Reserve Bank to ease out that set of cost of funds, cost of capital. Yes, on the input side, other raw materials and other thing, so that depends upon, again, there will be a kind of trade-off between the people who, because everybody will be wanting business to grow, everybody will be wanting to sell. That would mean that they would like to grab the market as soon as other parties demanding. So there is going to be a set of adjustment, price adjustment between the buyer and seller. That in that process, the cost of operations could be brought down. Third, the employment. That is where the third major segment on cost. So that is where, including right from the government and many major companies have announced that there will be a freeze on bonuses or freeze on increments or even reduction in the this job, in the employee cost. So that way they are trying to readjust, but it is a double-edged weapon, because when you reduce the employee compensation, the counter effect on that will be consumption is going to be affected, and the demand for goods and services will be less. So that is another side of the story. So that is where I am not fully in favor of reducing the cost of or compensation for the labor or the employees. That is not the right method, because when we are facing recession, we should leave enough money in the hands of the people to consume. So when we leave more money in the hands of the people to consume, then it goes towards increasing the demand and increasing the income of the businesses. So there it will have to be a little more careful.
Yeah, I think it's a tight balance. It's a balancing act that the government and RBI have to do. Sir, I have a question to you from ETV Bharat. They're asking you a question, is that what is your recommendation to the government for helping the MSMEs? I think that's a lot that that's a focus area. As how are we going to help the MSMEs? So could you highlight some points, sir?
Yeah, MSME, very first expectation from the government is that it should give credit guarantee for the fresh loans for the MSMEs. That's the first thing, minimum thing which the government should be doing, and the banks should have very relaxed standards in terms of assessing the working capital, the business cycle, because nobody is going to get their receivables in 90 days in this year. It is going to be minimum 6 months or even 1 full year. That will have to be factored in while assessing the working capital needs of the MSMEs. That will be yes, Reserve Bank has left the freedom to the banks to decide. Reserve Bank has not prescribed any norm. All those Tandem Choria Committee norms have been withdrawn. But the banks typically follow those norms. They will have to revise those ideas, those factors more suitable to the current situation. That is the second aspect, second measure that will be needed. Third, of course, as I said, some radical thinking towards giving equity support for the MSMEs.
Yeah, absolutely. I think I hope that's, I really like your answer, sir. Thank you very much. So one of the question that and it keeps coming up is on the digital currency. Because of COVID, it's like getting enhanced. Do you think India can shift on the currency usage? What is RBI's take on this? I don't know whether you can give RBI's take, but can we see a digital currency also coming into circulation? I mean, like other currencies, other countries are seriously looking at it.
See, on digital currency, I have been airing this opinion quite long, that once digital currency is issued by the authorities, that's the end of any other digitalization of the economy. Because once a government, that is a central bank, issues a currency which is digital, then no other digital instrument will be needed by anybody. So everything will fully be settled only through the centrally issued digital currency. So that's why I'm not in favor at all for a central bank to be issuing a digital currency. Digital currency, the way people now have understood is something like that cryptocurrency. There, the fundamental idea was that there will be no issuing authority at all. Because of that attended problem, people have started talking about let the authority themselves issue the digital currency. But as I said, the moment it is done, then all the payments instruments, all the payment varieties which we are thinking which have been thriving across the world, including in India, they will all get stopped.
Absolutely, sir. So you have already covered quite a range of topic, but as you know, this is you being what you are, there are a lot of things that people are asking. One of the things perhaps you have not touched is the on the capital markets, and I think because most people are at home, people are looking at share stocks and prices. What according to what are your expectations? Something on capital markets, health of banks and NBFCs. Can you just touch upon these points briefly?
Yeah, capital market during this time, there is going to be initial hiccup is definitely there that already we are experiencing. The Sensex have been dropping like quite a large loss we have experienced. But going forward, it is going to be different because the reason is that Indian growth story is going to be distinctly on the positive side vis-a-vis the rest of the world. Especially advanced economies, they are all awash with capital. All of them will be looking around for very strong returns possibility, where the reasonable assurance is there about the returns and the growth. And there, India definitely will be ranking at the very top. Second supporting factor will be the reaction or the kind of emotion, whether it is emotional reaction or otherwise, vis-a-vis China. So it is not going to be an automatic alternative for China. India cannot become automatically, but there is certainly India will be an attractive proposition for the world capital funds to be looking around for getting invested in India. Not just the funds, and even the production facilities also. India will definitely be one of the countries which the MNCs will be looking around and assessing. And that is where, if the government, as of now, there are at least initial indication that it will be very supportive of getting the businesses which China will be losing. Hopefully, if we have very strong measures to support that, we'll be able to get that kind of flows also into India. India, by and large, one very positive factor about India is that it's such a large economy. It is its production base cuts across very many type of goods and services. It can stand on its own. It need not necessarily be growing only for its export or international trade. It has got its own momentum, its own large consumption base is available. And these are the positive factors which will attract the international funds to be coming into India. When they come in, obviously they will come through the stock exchanges, through the FPI route, and by extension through the FDI route. So that is why market will certainly be coming back to good returns very soon. Capital market is going to be surviving and thriving along.
Okay, so thank you very much. Sir, we have already exceeded the time a little bit. Are you okay to extend it for another 10 minutes, sir?
Yeah, I have no problem. Certainly.
Okay. So, you spoke about capital. In relation to that, there is a question asked that the Indian stock market is going diversely opposite to the world market. The world market is dipping, whereas Indian share market is just on the rise. Is there some thoughts on this? I mean, this could be just your personal thoughts, if you have anything, sir.
Sorry, I couldn't get the question right. Can you repeat that?
Yeah, the question is that the Indian capital market last for a few days now, it's been on the rise. We are seeing a jump in the share points, whereas the world global market is actually going down. So, someone has asked, who is obviously is in the stock market, saying that can you explain this phenomenon from a financial point of view?
Day-to-day movements in stock market, that will have to be explained totally differently, because markets reacts to certain announcements, certain development, geopolitical or otherwise. So that way, I will not be able to explain day-to-day movements. Yesterday, why it happened, day for yesterday, how it happened. That is not my area of study. So I will not be able. I can only look at broad trends which across a minimum period of 3 months to 6 months and later. That's the one I explained, that going forward, because of the factors that I explained, market is going to be upstream. But as I said, short period explanation, sorry, I am not I am
Yes,
not.
absolutely. Yeah, absolutely. I don't think they're expecting that, sir. It was just an overall thought from you, and I think that you explained very, very well. Going back to one more MSME comment that has come, because the MSMEs will not be are not functioning and will not be able to function at least for the next 2-3 months. Their ratings are going to take a hit. So, but bank credits come to them on based on the ratings. So, this how do we take care of this problem? Of ratings and credit loan to be given to them.
I don't think MSMEs go for ratings.
Okay.
Typically, they don't go to the market for raising because most of the time, the people who go to the raise money from the capital market, they are the ones who go after rating. Otherwise, by any loan proposal, banks will have to rate themselves based on their own internal risk models. That will anyway will have to be there, whether MSME gets external rating or not. So that, as I said, that banks way of functioning and with their hesitancy of the track record of hesitancy in the last few years, bank funding, bank fund flow to MSMEs or even for large corporate in the current fiscal is not going to be sizable. That is given. That is where both Reserve Bank and government will have to use some extra moral pressure on the banks to see that they support the but if they are left to themselves, bankers are unlikely to be supportive in a big way. That is where alternate funding, as I said, shadow banking, NBFCs or others will be thriving.
Yes, sir. Thank you. Thank you so much, sir. So one question that comes back is the Basel capital. Because of the stress times, do you expect that the norms will be relaxed for some time?
Norms for
The Basel capital.
Basel capital, right? Yes, already we have seen that when Reserve Bank came out with its own moratorium guidelines, initially Reserve Bank did not provide for what the bankers were expecting, that the NPA position as of March 1st should stand good. Reserve Bank had initial hesitation on that. Later on, we found that Basel themselves announced that there could be a standstill for that 3 months period. So Basel is also watching out the developments across the world, and they themselves are guiding modification of the Basel guidelines relating to credit norms. And further, because it is an international governance, and every country, including India, is a signatory to such norms, it will not be easy for Reserve Bank to simply go away from the norms. Further norms, even Basel themselves will be changing. Yes, that is what, as I said, they are also realistic. They are also factoring in developments across the economies and coming out with a further modification, we can hope.
Okay, I have another question, which is like diverse from today. It's the age of WFH, work from home, and many companies are already started saying that that's the way to work, which means the cost of IT or other companies is going to come down dramatically. Will this have an impact on the commercial sector, the real estate sector? Will there be a direct effect on them?
Here there are obviously one side of the story is that because people will not be will be required to work from home, and companies will also find it cost effective to enforce that, and in that process there will be less demand for working space. That is one side. The second side is that because this whole thing has been initiated because of COVID, dealing with COVID automatically means that there has to be social distancing. That would mean that even the way the people who will be working in offices, they will be required to be given more space per person. So that would automatically mean that some kind of negative effect of people working from home can be compensated by the increased space requirement for the people who will be working in offices. So there will be some trade-off between that. But yes, and it is not that wholeheartedly, wholesomely, all companies will be able to do all their work from home. That is just not feasible. During this lockdown period, because there was no alternative at all, everyone agreed that they will be doing it. But going forward, it is not going to be the norm. yes, the people who are using technology to the core, tech companies, yes, there will be a possibility that work from home will be the norm rather than working from office. So that could be there. If the question was relating to only that group, yes, their demand for office space will be less.
Yeah, I guess relatively office space will be less on demand, um, but I think overall it should remain there. And a question that has come is that wherever there is a company industries which do take credit from the banks, and there could be some way of some solution found. But there are those tiny micro SME units which do not borrow but have completely lost out in this period. So what can be done for them, and what is your advice to such companies?
Yeah, that is a real problem. That's what I mentioned, that the personal service segment, who are kind of self-employed on their own, they are the ones who are going to have the deep depth of the problem. They'll be experiencing a lot. The reason is that since they had been self-employed, their self ego is certainly on the high side. They will not be looking around for government support in terms of normal poverty related measures, which they will not avail themselves. Because, however, they have been pushed into poverty now. They are the people who, so somebody has called them as christened them as neo-poor. Yes, they are the new set of poor people because they lost complete their opportunity for income. Luckily, the loss had been, as of now, 2 full months income, and maybe another 2-3 months they will have lesser income only. But what will be possible, in my reckoning, will be these are the people who will be demanding, who will be hiking their service charges for whether it is electrician or plumber or taxi drivers, auto drivers. These are the people who when they normalcy returns, they are likely to be demanding higher compensation for their services. That's the way they will make up their
also advisor to us.
Thank you, sir. Sir, if you don't mind, can we take a couple of more questions from the audience, if you don't mind, sir?
Sure, sure.
Okay, sir. So can we look at Mr. Sudhakar Kaza? You've been wanting to ask a question. You can unmute and ask, please.
Sir, I was wanting to know if what would be the effect on banks, NBFCs, mean the finance on the balance sheets of banks, NBFCs, and what I hear is a lot of microfinance companies are in dire stress.
True. Both NBFCs and microfinance companies are in trouble now because the current regulatory adjustments are facilitation given by the Reserve Bank. These guidelines do not take care of these companies' specific position, because Reserve Bank's own assessment is that NBFCs, as a group, they all have enough cash to pay back their whatever they're due towards bank loans. So that is their assessment. That is they all have cash flows, cash reserves. So by which they want Reserve Bank wants them to utilize for paying up their for meeting their liabilities, rather than by giving them a special direct support. Whereas the NBFCs are demanding that cash reserves are also needed. There are individual companies have different companies are at a different position with regard to cash reserve, and that's why this whitewashing across all or branding all the NBFCs as a single type, that will not be correct. That's their argument. Looks like so far Reserve Bank has not yielded on that. Perhaps the Reserve Bank may have to make some adjustment towards that. And microfinance companies, yes, because they are the another version of the NBFC problem only, because their dependency on bank loans are much more. Sorry. Their dependency on bank loans are much more. There, they probably what they may have to do is that they have to sell off they have to assign their credit to the banks and raise money rather than to keeping it in their own books. That's why they may have to face the situation as of now.
Right. So thank you. Mani, you want to ask a question?
Yeah, Kumar, I think I have a question. I think you have basically it has been very heavy dose of question and answer session. I think you have to give Mr. Gandhi some break. Otherwise, so you can have your water, sir. I think there are huge questions.
No, I didn't break. That's okay. Thank you.
Quick one is, sir, I think I know most of your life you have been very active. Even after retirement, you have been very active. How do you basically just learn yourself to be sitting at home for the last 40 or 30 days? How difficult or how easy it was? And I think I'd like to know this because it's the most difficult thing for anybody. Yes.
Okay. Because even otherwise, because after retirement, you have a lot of time. So what typically I do is that occasionally, it is not that on a daily basis, occasionally I sit and look out at the data, because whenever a new set of data is published by Reserve Bank or government or any other authorities, I look over it, compare it, look back and compare it with the previous period and try to deduce certain trends or certain insights into that. So that is one way of constantly updating my understanding of the markets and the sectors, economy, finance, bank, etc. So that is one constant touch with figures, because once you look at the data, every time you get a different insight, because things are developing, evolving. You cannot just be sticking on to your old understanding. So you have to start asking questions. Why this data is like this? Why? What are the contributing factors? There, either you look around and to look for support for another set of data points, or you apply your logic and try to understand why, how these things could be explained. So that's the way I try to keep up with the developments. And during this period of COVID lockdown, yes, in addition to this kind of a little bit of intellectual exercise, housework is always there. I like cooking, so I do take part in cooking.
Yeah, I did mention that right at the beginning. It'll be good to see. I think, I think, Mani, the point is that when you have a person as eminent as Mr. Gandhi, and there are going to be hundreds and hundreds of questions, I think these sessions will never end. So I think we have to put an end to this session.
I like to add, I cook, both of you, I think you like cooking and Mr. Gandhi like cooking, but I don't know cooking. So I keep washing the utensils and sweeping. That's a better option to do. Thanks a lot.
So thank you very much, sir. I mean, there is no end to the question that will keep coming. And I'm sure we will, with the demand that we have, we would request you to come once again, maybe after 2 days. Can I request all to unmute and give Mr. Gandhi a round of applause, please? I think this is wonderful having you here, sir. Yeah.
Thank you very much.
The best, sir, we can do to thank you, sir. And it has been, you have covered almost all the topics around finance and how things will be in future, including the next gen advices to them. So once again, my heartfelt thanks to you. Thank you all the participants who have come, and thank you participants for asking so many questions. It's so good to be so interactive. And I'm sorry, some of the questions I couldn't take because we really run out of time, and it's not fair that we keep extending the time. So thank you very much. I hope to see all of you in the next round of COVID special series, and I hope to keep gaining knowledge, and you participants can come in and have much more knowledge of in this series of, that we are conducting. Thank you so much once again.
Thank you, KK. Thank you, everybody.